Hello and welcome everyone to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we'll be going through oil, the key ranges for this week, and really what you need to be aware of for the week ahead. So first of all, with respect to hedge funds and money managers, real smart money in this market, over the latest week, we've only seen ever so slight small change with respect to the reduction of Brent crude oil net long positions and a slight reduction also to the net long positions in US oil as well. And that's been evident, in fact, in the latest week, where we did see oil break out to the upside, in line, in fact, with the ranges that we discussed with you last week. We saw a tap back towards $60 per barrel last week. US oil, in fact, breaking out to 6-week highs just last week. We saw another drawdown on the crude oil inventory data. That's now been the 5th consecutive week of drawdown with respect to the oil inventory data. You want to look out for, in fact, this week on Tuesday, the API numbers with respect to the inventories, and also Wednesday's oil inventory data as well, which will be coming out at 3:30. So with that, definitely keep an eye on that. We're seeing that be a major driver at the moment. We're expecting again to see another drawdown with respect to the oil inventories for this week. With the ranges for this week on oil, what we're looking for is support to be coming in at around that 58 to 55 US dollar per barrel handle, and resistance again between around 61 to 62. So if we were to see another breakout back towards the swing highs, we will be looking for, again, resistance and a target of 61 to $62 per barrel, and then support coming in around 58 to 58.50, which would position oil for this week with approximately a 400-point range. So if we do see a bit more pressure to the downside, which we're seeing at the moment, that's been evidenced, of course, by the fact that hedge funds have started to trim their overall net longs. We've seen that 60 to 61 level tapped at the beginning of the week, and now we're rolling back over mid-range right now, around 59.50 at the moment. If we do get a bit more pressure to the downside, maybe about 100 to 150 point move, I'm looking again for evidence coming in of buyers around the lower end of that range, and especially if that was to be married up with, for example, crude oil inventory data. If we show another drawdown with respect to inventories, that's where we could very clearly see support come into the market for oil. So I'm watching out for that over the course of this week. I am expecting range-bound trade, being that we are moving into the summer season at the moment. The volumes are starting to drop down a little bit with respect to oil. Still plenty of trade opportunities to capitalize within those levels, which I've just discussed as well. And certainly last week we have again seen another breakout within the levels that we've been anticipating, with a tap of that $60 per barrel handle. So with that, I wish you good trading, and we'll see you back here next week for Oil Asset of the Day.